Welcome to this special interview with Kelvin Ko, the co-founder of Spartan Group, right here from Dubai from the Token 24/9 conference. Kelvin, thank you for being with us on the Crypto Weekly Show.
Sure, happy to be here.
Kelvin, I will talk about a whole range of topics this morning, but let me start first about discuss what's happening with the interest you're seeing from investors when it comes to crypto asset management products. Are you seeing a lot of interest from retail customers, a lot of institutional customers, and what type of products are you seeing demand for?
I mean, for us, primarily, what we do really caters to high net worth investors as well as institutional investors rather than retail investors. And we're seeing a lot of interest from many of the fund of funds, as well as family offices that want to explore the asset class and look for strategies that's beyond plain vanilla ETF strategies, right? I think retail investors are also interested in the asset class, but the interest sort of comes and goes depending on what's interesting and what is the flavor of the month or quarter.
So Kelvin, from a strategy perspective, what type of strategy are you seeing demand from these institutional investors?
Well, first of all, we're definitely seeing strong interest in the ETF products, and you can see that in the flow data, right? But beyond the ETF products, institutions are starting to branch out into other strategies, right? So they're interested to look at the broader array of altcoins that's available to invest in. They're interested in market neutral strategies where you are investing in crypto assets, but you have less volatility and generally higher returns than traditional asset classes. And then we're also seeing interest, obviously, in the early stage venture strategy, and that's been something that's been happening for quite a number of years.
Let's talk about the fundamental strategy. Do you really believe in crypto it's possible to run a fundamental long-only strategy? Considering there's a lot of macro noise, a lot of retail, there's a lot of buzz. How do you even run a fundamental long buy strategy?
That's a great question. Well, I spent 20 years in TradFi, where I was initially a sell-side analyst, and ultimately I also moved to a hedge fund to do fundamental equity long-short. And so most of my career is sort of centered around understanding company fundamentals and picking good assets to invest in. And when I first encountered crypto in 2017, what intrigued me was when I look at the movement of these tokens, they respond to news events and catalysts and so on and so forth, right? Very much like the way stocks behave. And I think back then, a lot of people believed it was all entirely speculation, but what I saw was very different. And so we started going down that rabbit hole and started looking for data that we could use to build a fundamental analysis. So we went on-chain, we extracted data on all of these protocols and really used the traditional fundamental frameworks to evaluate these tokens. And if you look at returns that our fund has generated and how it's outperformed the major assets like Bitcoin and Ethereum, you can see that the strategy actually works.
But what actually, when you look at these, like the different metrics you're getting on chain, are there any of them that you find have been particularly useful when determining the quality or the potential or the usability and adoption, the potential of a certain L1 or any different token?
Yeah, obviously it varies from project to project and asset to asset. And depending on what project you're looking at, the metrics will be different. So for the L1s, obviously the amount of transaction volume and the amount of fees the L1 generates is the key metric. For something like a DeFi protocol, like a DEX or a lending protocol, the amount of volumes that they do and the fees they're able to clip on those transactions is the main thing because that drives their top line. And so it varies for every different asset.
And when you talk about, we're talking earlier about the venture space, right? When you look at the future of VC funds in crypto, there's obviously the whole world of liquid tokens and obviously the whole traditional VC funds that are there. Do you believe actually having VC funds in crypto makes sense, or you believe it's more liquid token strategies that we're going to see in the future, just considering how the value creation happens in a lot of these projects?
So I guess for liquid funds, typically we want to invest in assets that are liquid, right? So not something that's very early stage where we can't trade in and out of, because liquid funds typically have, monthly redemption windows. And so we need to be able to buy and sell easily. And therefore, even though we started as a liquid fund, before we delve into the venture strategies, these very early stage projects are not really appropriate for liquid funds. So that's why you need venture funds. And I think venture funds sort of fulfill a role in crypto because we have a lot of projects and a lot of founders that are raising capital, and many of them are just starting out with an idea and maybe a small team, and they really need investors that can take risk, give them risk capital, and in many cases expect them to fail, and be with them on a journey for 4 or 5 years or longer.
I mean, the big question though is there's been obviously a lot of noise recently with these various tokens. We've seen incidents like Mantra and all the noise that what happened there. There's been a lot of other, let's say, incidents that happen as well in the space, from the FDUSD peg, and what's your view on where we are when it comes to maturity level of these L1s and these liquid tokens in the market?
I would say the ecosystem in general is still early, right? And we don't even have a proper regulatory framework in most places, including the US, which is the biggest and deepest capital market, right? And so because of that, there are no set of rules when it comes to when a project is ready for listing and what are the criteria that needs to be met in order for projects to be listed. So the exchanges apply an arbitrary framework to that. And so there are no clear standards. And that's why we have these events from time to time, right? Where either there's a rug pull or you see valuations that don't make sense from a fundamental perspective, right? But I think that's going to change, right? As regulations get into place and we have clearer standards of what projects need to deliver in order to get listed. And as we get more institutional capital coming into the space as well, I think all of those things will start to become more orderly.
And let's talk about sectors. For example, I know you have a DeFi fund and you have one that is more on the gaming vertical. Yes. What particular vertical do you see having a lot of potential upside in the next 1 or 2 years, and why?
Well, I mean, DeFi sort of had a big sort of rally back in 2020, right? And that was sort of the event that catalyzed DeFi and brought all the innovators and all the capital into DeFi. And so we've seen very strong growth in DeFi over the last 3 to 5 years. But DeFi has gotten to a stage where I think the underlying building blocks of DeFi are already there, and the marginal innovation is quite limited. Right? And then we saw the same thing happen with gaming, 2021. I think this cycle, some of the newer areas that are interesting are areas like AI, obviously. There's a lot of investments going there, and people are excited about the future of AI. And then the other area I would say that is quite interesting is DeepIn. We see a lot of startups innovating as well.
The decentralized physical infrastructure, definitely an area to watch there. Thank you very much, Kelvin, for being with us. That was Kelvin Ko, the co-founder of Spartan Group, right here from Dubai. Thank you, Kelvin. Pleasure.
Are your children prepared for the future of money? Order Decoding Crypto with Henry and Hodler, the #1 new release kids book on Amazon.